This is Tom Asprey with the Viper Report Market Wrap video for the week ending September 20th. In last week's video that's still available on YouTube, I presented the evidence that suggested despite the high level of bearishness, that stocks were likely to break to the upside, not to the downside, as some analysts showed a very low probability that the QQQ would move higher. After last week's action and destruction of many put holdings with the 10-point rise in the SPY, some of those who followed my bullish outlook are wondering if it's just a blue sky stock market ahead. It was a week of solid gains, led by the Dow Jones Industrials 1.6, closing at 42,063. Many of us never thought that would happen. I still have a Dow 10,000 cap in the laundry room. Also 1.4% gains in the NASDAQ 100, the S&P, SPY. Transports were just barely higher. Of course, they got knocked down by FedEx's dismal earnings. And the utilities were also a bit lower. Gold had another good week. And the small caps had a strong performance with the Russell up 2.2. It was the best performer. Looking at the weekly charts of the SPY, you can see we definitely broke out above what many of us concerned was a double top after the sharply lower close 3 weeks ago. But once again, the AD numbers, they were moving sharply higher as the S&P was moving lower. That was a sign that very few stocks were declining and more were advancing. And it was just those few decliners that knocked the averages down. So if you managed your stock portfolio based on the AD analysis, it's been a pretty good year all the time. You can see the S&P broke out in November, and it's been above its rising EMA since then. Stocks only, of course, that's just the stock component of the New York Composite. It's often choppier, and that's been the case now as it finally joined the party in the upside in the past 2 weeks, but also completed a major bottom formation in February of 24. And the all AD line, that's everything. It's still going gangbusters. About the main negative here, and the timing here will be tough, is the fact that the gap between the AD line and its moving average is quite high. You know, we've seen that before, and it can continue to chug higher. And if we look at the daily numbers, there's no signs of certainly a top, though a pullback could happen at any time. And for those people looking for the blue sky, given the election year, war in the Middle East, and a number of other and a possible budget showdown, you know, we will likely to see sharp pullbacks in the next month or two as we head into the election. Right now, if you monitor the AD lines, you can see that, you know, the pullback, we'll talk a little bit in the start of September down to the September lows. You know, the AD line just pulled back to support like you'd expect. Here was the much stronger support, was way down here, so wasn't in danger. Stocks only, you know, it turned negative on that pullback. It was the only one of the major ones to turn negative, and now has made another new high. NYSE All held its moving average, and also shows a pattern of higher lows and higher highs. Looking at the QQQ, also still looks good. Didn't quite make it above the high from August, but the AD line suggests it will. Nice breakout here, and the relative performance on a weekly basis does not yet indicate that QQQ is a market leader. It needs to move back above its moving average, and that could come, I would think, by the time we get into October. On a daily basis, clearly positive. Pulled back a little bit on Friday, but you can see the sort of tight range. So we got the 20-day EMA at 470 and a support level between that and 476. With higher highs. The decline we'll talk about based on the hourly. This really got started here at the end of August, but the AD line just came right back to support. We'd noticed this breakout here, in August, so the breakout level becomes support, and that's right where the AD line held. Daily RS is trying to bottom, needs to get a strong move above this peak, and then of course this prior peak to confirm that the Qs are again leading the SPY higher. In the regular newsletters, I spend a fair amount of time looking at the hourly charts, and also as well my teaching. I think it gives you a unique insight into the market, and a lot of that features horizontal support levels. So this is how the chart looked right before I left on my vacation. You can see we had resistance here at 484.43, and then we had support here at 475.55. This line marks the end of, or this chart ends with the end of trading on Friday, August 23rd. We'd had that reversal on Thursday, and you can see that the 60-minute RS had broken its uptrend and turned negative, as had the OBV. So, we got some sideways to upward action on Friday. It was still favoring at that point, more of a correction. So let's advance this on a tick-by-tick basis. You can kind of see what happened here. By early in the next following week, last week of August, you can see we continued to drift lower. Started the week off below the weekly pivot here. Remember, on a 60-minute or intraday chart, stock charts, it gives you weekly pivots. Daily charts give you monthly. Weekly charts give you yearly. So, when you get this thing, we've been pretty much above, the pivot since the past month. Here was the pivot this week, back there, and so the new pivot moved up to this 479, and that became the barrier to watch that week. And, we moved sideways and then dropped sharply, end of the week, back up, but we still failed at 477. Once again, the pivot was 479. Clearly, the RS is in a downtrend, as is the on-balance volume. We tried to move sideways before the next wave of selling at the start of September, and you can see we got down to the S2, and there was not much signs of a bounce. Tried to stabilize again. The support we identified at 454 gave way. We got down to 448.19. Which is a cluster of support back in here, and that's so that was a potential level, where we could see a bottom, and then we saw the upside reversal on the 11th, and that was a sign that the correction was likely over. So we had a downtrend, and the RS was broken, and the OBV turned around. So it's important to look at a bunch of different time frames if you're, gauging your portfolio or your stock exposure. So this chart is daily chart of the Qs. This is the spread between the close and the 20-period exponential moving average and the on-balance volume here. So you can see, as we got into, we had this reversal day here, on the 22nd, which triggered a low close doji sell signal. There's a doji on Tuesday. Wednesday we moved higher. Thursday we dropped below the doji low. Friday was that day we just talked about, just sideways on the hourly charts, and then the selling really started to pick up, accelerated, as we started September. And you can see that, the spread here is another type of momentum indicator. When it's trying to bottom out like it did here in our early August, it gives you a positive signal. Here it shows that, losing momentum. And then we had the reversal here on the 11th, which was pretty dramatic. Dropped down sharply early in trading on the CPI number, then rebounded to close higher and above the prior day's highs. And as I noted at the time, the AD lines had flipped back to positive. So let's review some of the other daily indicators. Don't show you are positive. Basically, the VIX is below its moving average and declining. The VXN, the volatility for the NASDAQ 100 also. So, if this were to bounce back above its moving average and then start a new uptrend, that would be a negative for stocks, but not happening right now. QQQs, or the small caps rather, this is the IJR, had a nice bounce right up into resistance here. So, so we get a soft landing back in to the 20-day EMA, which is about, 114. So, below the level. The AD line did make a new high on the S&P 600, so that's a good sign. OBV is not acting well. High lows analysis has gotten very strong last week. You can see it surged over 400, so above this peak. That's what we wanted to see. And in terms of the new lows, stalled right at 100 here. So that's something we always watch. If you start to see a couple of days of NYSE new lows, say above 110, that'd be a sign that, okay, we're going to have another pullback. Looking at the ETF data, clearly bullish, 74.6% above their quarterly pivots. You can see on the growth gauge, Cloud generated a weekly positive DTS and closed above its quarterly pivot, as did IWF, which is a less volatile QQQ and is often better for most clients. XLK and VGT, real pure high tech, are both negative, but probably look for a switch maybe in this coming week. 100% above the pivot. Value holding firm, 72.7. All the negatives are in the energy sector, even though it had a nice bounce. The T&J sector watch I sent out earlier to subscribers shows you, despite the bounce, XLE was the best performer of the week, up 3.7%. Not a lot of positive technicals yet. Okay, so a bunch of daily DTSs, but only PXD is positive on a greater time period, as is WMB. So we'll be watching this. Typically, you see a turnaround, like to see it close above 50% here, and right now only 16.7% are above the quarterly pivot. Materials looking strong, up 100. Chemicals, the area to look there. DD, a bunch of other smaller chemicals, Newmont, steel miner, etc., also positive. Industrials, Lockheed Martin, a bunch of conglomerates, etc., and Wells Railroads, CSX, and UNP, as well as ADP. So some pretty nice looking numbers here. Has some room to move up, 83% in positive DTS. So I would think that probably move up towards 100% next week and kick a few more of the weekly readings positive. Discretionary also, is pretty much holding. Nike, due to its new chief, had a strong close for the week. Consumer staples had a pretty good plunge. We'll talk about when we get to the table in a little bit. So we're watching that to see if this is finally a pullback in that sector. Financials, okay, but not great. A fair amount of red there. JP Morgan. Morgan Stanley gave a 3-day DTS on last week. So we'll see if that can translate into a weekly signal. A lot of the bank stocks do look pretty good. Information technology, CRM is the only one that flashed some new green late in the week. NVIDIA, AVGO, Broadcom is a holding in the stocks, hot stocks portfolio. It looks very strong, and I have some other interesting picks for Monday's trading for those of you who are looking. Stocks generally have a better potential, I think, over the near term, because there are a number of ones that are just starting to come out of consolidation patterns, where there are not a lot of ETFs that have that, except for the ones like XLE, which are beaten down. Communication services, Disney, XLC gave a weekly buy and last week, so it was long, and we added to our positions in that. Utilities, real estate has dropped a little bit. We have a couple of REITs that have been doing really well, and so we're watching those. The ETF report review is sent out first thing this morning to subscribers. Some of what I've already discussed here. This shows the 3-day bullish signal in the SPXL. That's the direct send 3 times. S&P looks pretty good. Next pivot resistance, at 168.24. Back to the table for this week. So some interesting changes we talked about last week, and If you hadn't seen that, check it out on YouTube. But you can see XLB went from 58.3 to 100. That's often the size of a new move to the upside. XLI, the industrials, we talked about some of those components. Also a lesser move up, so we'd like to see this move up even more next week. XLP went from 91.7 to 58, so that's a deterioration. Is it going to crack the 50 level? And XLC, as I said, weekly buy signal, and it had a nice improvement there. So pretty much all the ETF sector ETFs were higher. You can see that here's the weekly signal in XLC. There was XLRE. The REITs gave a 1 hour buy on Friday, so that'll be something to watch. Here's the weekly chart of XLC. You can see this consolidation pattern. So if this is going to break out above that, you can measure this. It has some pretty significant upside targets. As always, I give you some thumb candles of some of the holdings in the portfolio. You can see pretty much this is it. The VTI, the value is also doing pretty well, as is the home builders. Still range bound in the regional banks. We're positioned both in the Qs and the SPY, and gold had another good week. Sideways action, healthcare at this point. Lastly, in the themes report, a couple interesting things. So in the cybersecurity, OKTA and FTNT, which were long in the stock, both flashed daily buy signals on Friday, so that's a good sign. Pretty much OKTA still has some work to do because it's still negative on a 3-day and a weekly and below its pivot. FTNT was my pick earlier because it does look better in that regard. Scrolling down, always a good place to look for some outside the box. FSLR closed above its pivot, so that's a solar. So that might be something we want to watch at next week. And then if you get into ground transport, as I mentioned before, the railroads, the main point there was interesting that the retail gauge 83.3%. So will be Dollar General is about one of the main ones, and Walmart have negative in 4 hours. So but the weekly and the 3-day are positive, as well as Target still below its pivot. And lastly, looking at the aerospace and defense, some strong signals there. LHX, NOC, and LMT, but not much happening in the oil and gas gauge. And we'll leave it at there. I'll be putting up some more articles on the Viper report. And of course, if you're interested in specific advice, you can go to the Viper ETF or the Hot Stocks report. Or if you're interested in one-on-one trading, you can email me at tom@Viper Report. We'll give you some basics about what we do and how we might be able to help you. Hope you have. Should be another fun week. Lots of data, including the Fed's inflation gauge. So, buy on weakness. Monitor the rising 20-day MA for new long positions. Take care.